goods and services, partly completed. We say goods and services that are basically partly completed at the end of the reporting period. So say the work in progress is basically goods and services that are basically partly completed at the end of what we call the accounting period. So what are the control measures? What is the essence, objectives of control over stocks? Objectives objectives of having control over the stocks and the work in progress. Why should we have controls over stocks and the work in progress? I basically say the work in progress is basically goods and services that are partly completed at the end of what we call operating period. Why should you have control over stock? You see, stock is what? When you have stock is what basically generates yourself. Why should you have control over stocks and the work in progress? Number one is to ensure movement. All stock movement in and out are properly authorized. To ensure what we call movement in and out of stock, we say is authorized. So if you don't have control over stocks, one of the objectives, we say that movement of in and out of stocks is basically authorized. We say if there are no controls over stock, even employee can basically take the stocks altogether for their own sell altogether. So number one, to make sure that if there's a movement of in and out of stock, it's basically authorized. You can have scenarios where employees are actually bringing their stocks in and they're selling altogether instead of the organization's stock altogether. So the first objective why we need to have control over stock is to control movement in and out is basically authorized altogether. Then you say ensure that stocks levels held are reasonable. Ensure what you call stock levels held are reasonable. Reasonable in the sense that these are stocks that are enough to manage sales altogether. Ensure that stock levels are basically reasonable, but that ensure stocks are valued appropriately. Ensure that what we call stocks are basically valued appropriately. We say that the stocks are basically valued appropriately. Stocks are basically valued appropriately. And again, also safeguard, they can easily be stolen altogether. Why do you need to have control? Why do you think we have a stock manager and not anybody carries the key altogether? Safeguard, what you call safeguard, what you call the safeguard from what you call from damage or stocks basically being stolen. So these are the objectives. Why do we need to have controls over what we call the stocks and the work in progress? Together, team, we respond with the yes together. So then we talk about control procedures. Are we together? Control procedures. So if today, for example, Zipporah sees an organization, if, for example, today, Zipporah, you are an auditor for a company, and basically you see an organization, you realize that the stocks are coming in and moving out, and there's nobody authorizing. There's no order. If you see, for example, the stores, everybody has keys to the stores. Those are issues that basically raise alarm in an organization. So basically, what are the control procedures that needs to be ensured, that need to be put in place to ensure the safety that these objectives are basically achieved? What are these control procedures that basically need to be put in place to ensure those objectives that we basically put in place are basically achieved? So what are those controls? Access to the store, we need to access to what it calls the store is basically restricted. You need to restrict what you call access to the store. Together, team, access to the store basically needs to be restricted. Not every person should go there. Are we together? Then we need to understand that movement in and out of store, movement We call it in and out of what we call of the store. Movement in and out of the store must be authorized. You don't just must be authorized, must definitely be authorized. And we can discuss those other maybe 2 or 3. What are some of the things that we can do to ensure that these objectives that we mentioned up here are basically achieved in relation to stock and work in progress? What need you do? What should you do? What are some of the things that can basically do to ensure that there's control? Record is also key. Is it true that we also need records together? Stock take, are we together? To ensure that you have the records for the stock, such that when there's a movement of stock, you less altogether. So stock takes altogether. We have issues to do with stock takes. Apart from that, from the learners, 2 or 1 more. So there's something we call bin cards. What is a bin card? For those who have worked in organization, what is the bin card? We say that bin card system should be maintained. What they call bin card system. What is the bin card system? When you say bin card system should be maintained, should be basically maintained. What do you call the bin card method should basically be maintained. So whenever we talk about the bin card, these are basically contains what we call record kept at the store, showing movement of what? Of inventory. That is what we call a bin card. Kept at the storage location, basically showing the movement of what we call items altogether. So you can easily know what is happening. As at the end of this week, this is what has come in and this is what has gone out using the bin card altogether. Reorder levels, what we call the reorder levels in quantity, should be precise altogether, should definitely be precise altogether. But again, items that are of similar nature in terms of stock should basically be kept in the same location, together, team, should be kept in the same location together so that you have control. When one is missing, you can easily track. We respond with yes. So then very fast on controls over fixed assets. What they call control, we call it over what they call the fixed assets. Controls over what they call the fixed asset. Control over fixed asset. What is a fixed asset? When you ask what is a fixed asset, what is a fixed asset? What is an example of fixed asset? B. Example of fixed asset. So basically, fixed assets, we denote them by saying PPE. Are we together? PPE. That is property, plant, and equipment together. Those are fixed assets together. What can you tell about fixed assets in terms of one control? Before we talk about control, what we call control over what we call over the fixed asset. So what can you tell about fixed assets? What can you tell about fixed assets? In terms of purchase, they constitute a huge purchases altogether. Let's say, for example, we are buying a land altogether. Companies, yes, they can last for a longer period, more than a year. Are we together? They stay longer. In terms of even purchase value, are we together? In terms of purchase value, you realize that they will always constitute a large amount together. They would basically constitute what's called a large amount together. So then we talk about control over assets altogether, control over fixed assets, and we talk about precisely objectives. What should you have control over fixed assets? That is disposal, the aspects of, for example, purchase, aspects of purchase and disposal. When you're disposing, when we are purchasing, then definitely there's need for what they call control. What is the objective of having what they call controls over what they call the fixed assets? Acquisition and disposal is properly authorized. I'm saying this aspect, acquisition, what they call acquisition, and a standard acquisition and what we call disposal. Disposal is basically authorized. That is the first, is basically authorized to ensure that acquisition and disposal are basically authorized together. Again, also, yes, fixed assets are properly maintained. Perfect. Fixed assets, fixed, we understand assets are properly, we say, are properly maintained. Fixed assets, we understand, are properly maintained in order to ensure that the fixed assets are properly maintained, to ensure that what you call the fixed assets are properly maintained, but also very important, acquisition and disposal are at a proper price. Acquisition and disposal are at proper prices. What would happen in terms of acquisition? Individuals can overstate. Are we together? And even disposal, they can understate, so that you even lose altogether. So ensuring that acquisition, you realize sometimes an asset is this value. Those who are in charge are overstating so that they make money. So ensure that basically acquisition and disposal are basically at what you call proper prices, or what you call favorable prices, what you call the favorable prices, at the favorable prices. Maybe one or two, then you close it there. One or two, then we close it there. One or two, then we close it there. So what should be done? Record it, you're doing proper recording. Depreciation, you also do the depreciation so that you have the written down value together, so that you have the written down value. There's proper recording, there's proper depreciation that is done, and then at the end of the day, you have what you call the proper net book value of the asset together. The net book value of the asset. What are basically these control procedures that are basically put in place to do the objective? Control procedures that are basically put in place basically to ensure that the objectives that we have mentioned above, we can just discuss, we don't have to write them. So what are those control procedures that basically needs to be put in place to ensure that above issues that you say acquisition and disposal are at favorable price, fixed asset is maintained? Yes, fixed asset register, very key. You need to have what you call a fixed asset register. You need to have what you call a fixed asset register. Fixed asset register, yes. And a fixed asset register basically contains description of the asset, the date of purchase, the cost and the number officers primarily responsible for the asset altogether, the net book value at the end of each year, you'll definitely have it budgeted and approved. Yes, they should be. Number one, because these are assets of huge value, we need to understand disposal of these assets should be authorized by the board. Disposal of what they call of the assets should be, we understand, should be what they call authorized by what you call the board. Should basically be authorized by the board. Disposal should basically be authorized by the board. And again, issues to do with, yes, insurance. Are we together? To cover insured, are we together? The essence of insurance to cover insured, very key, insured. But again, on issues of acquisition, are we together? Annual capital expenditure budget should be submitted to the board for approval. That before you acquire, that budget should basically be submitted to the board for approval altogether. Insurance cover to cover that altogether. But then I talked about what you call the fixed asset register together, which is very key altogether. How do I understand? When I'm asked, for example, when audits are being done, and you've not kept maybe your accounts, one of the things that you'll be asked in order to get what's called the capital statement and exactly, you'll be asked for the fixed asset account, fixed asset register. So on a fixed asset register, we basically have what's called description of the asset, basically which asset this. We have what's called the date of purchase. We have what we call the cost and the supplier. We have issues to do with unique asset number, normal location of the asset, the NPV, that is the net book value, which is the cost minus depreciation at the end of the year. That should basically be also indicated on the fixed asset register. Do we have them in the notes? If we have them, then we respond with a yes. Do we have them? If we have them, then we respond. Yes, established to deal with procuring of assets. Very key. That's a good control measure. Perfect. On what fixed assets should contain, I've talked about the description of the asset, date of purchase, cost, and the supplier on the fixed asset register. Do we have them in the notes? I've mentioned a number of things. Description of the asset, are we together? Cost, date of the purchase, are we together? Unique asset number, NPV at respective year ends. So when you look at the fixed asset register, what do we contain in the fixed asset register? Those number of things. Can we actually say we have them in the notes? Do we have them in the notes? Yes. Wear and tear? Yes. Information? Perfect. We mentioned time, the rest. Then you have control over cash and check payments. Control over cash and what's called check payment. Control over cash and check payment. Why do we need to have control over cash and check payment? Why do we need to have controls? Before we talk about those controls, why do we need? If we don't have control over cash and check payments, see, I can easily write for myself a check. If there are no controls over cash, are we together? I can easily embezzle the cash altogether. So that's the essence of having altogether, making sure that we don't lose the cash altogether. So one of those things that you see, cash is very sensitive. And you realize, for example, for any organization, why do you think, for example, if you'd open a business, why would you think, for example, instead of keeping money in the business, why do you think people open bank accounts? And in those bank accounts, they also put control measures, where if there are many parties to it, you realize that the signatory to the account is not one person. Probably they'll say all of them. That in order for a payment to be initiated, then there's need for X, Y, and Z to authorize, because cash is sensitive altogether. Who can be trusted with 1 billion? You keep in your room, and after 6 months, we come and say that we'll have that 1 billion. Who can be trusted in this class with 1 billion in cash? There's nothing that is put. You can leave the house, you can check it, and then we come back. We make sure that after 6 months, we still have the 1 billion. You realize that not any. So what are those control measures in relation to what's called the cash and check payments? What should we do? You put a MEFA business. What if that's not what you're told to do? Yes, if you're not told to do that, would you be? So what are these control measures that basically needs to be put in place? Board should authorize opening of bank account. The board, we say should, we call it authorize what you call opening, what you call the opening of what you call of the bank account. We know that our cash is sensitive. We don't keep it there. Authorize opening of the bank account. The bank checks, the checks for organization should be kept under lock and key. The people who are very good at forging signature, checks should be kept. Checks should be kept. When sound kept under what you call lock and key. The check should basically be kept under lock and key. And now to the learners. What should we do to the learners? Bank check should never be signed. Yes, blank check should never be signed. Are we together? Somebody can decide if there are no proper controls. Today, I am paying myself, then running away. Yes, bank checks should never be signed altogether. But for some bank altogether, have you ever seen, for example, where where organizations, where they're given alerts that before you pay anything, please give us alert. Those are just probably control measures altogether. One of the things that we say in relation to ICS, that regardless of how strong uh, controls are, you cannot have what we call an absolute assurance. Is that true? Virginia, we say that no matter how strong the systems are, you cannot have what we call an absolute assurance. There'll still be people who find a way just to get something. Is it true that no matter how strong an internal control system is, definitely you cannot have what we call an absolute assurance? People will still craft ways of making money. People will still craft ways of basically getting out things from the organization altogether. But every day we are evolving, and that's why risk assessment on a daily basis is something that is continuous, that we have to constantly evolve, look for measures to put control. We say that checks should be signed with at least 2 people. Checks, as a control measure, checks should be signed with what we call at least 2 people. The checks should definitely be signed with at least 2 people. Our goal is to make sure bank reconciliation should be performed. Yes, very key. What is the essence of bank reconciliation? Why do you perform those bank reconciliation? Why should you perform those bank reconciliation? Why do you think we perform those bank reconciliation? Why do you prepare those bank reconciliation? You realize weekly, monthly, you're doing a bank reconciliation. Why is it important? To identify the actual balance, to reconcile actual. You're keeping a cash book and you have the bank statement. So the essence of bank reconciliation is basically to reconcile what is the bank and what you basically have in cash book. So, and again, bank statement should basically do what? Bank reconciliation should basically do what? It should reconcile cash. But again, it should also identify fraud and errors. If there's somebody who has kept on taking money from the account, when you're doing the bank reconciliations, you are able to raise alarm. So bank reconciliation should basically help you to detect what we call fraud and errors. Bank reconciliation should basically help us to detect what we call fraud and errors, which can facilitate identification of errors made by bank. At the same time, on bank reconciliation, the bank can basically make errors. Is it true? It's not just a must that it comes from the organization. Can the bank make errors? Yes. Where you find the bank debited instead of crediting, debited and instead of crediting. So again, through those bank reconciliation, you're also able to detect those errors that are basically coming from the bank itself. Are we together? So again, also it provides what we call evidence of correctness of the cash book and reconciled with an independent sourced bank statement. Are we together? The cash book, how correct is your cash book? And those who keep it vis-a-vis, you compare with the bank statement. Are we together? Then we proceed to what's called auditor's procedures with regard to the client's ICS. Who is responsible for the ICS? Designing and basically implementing the ICS. Who is basically responsible? Is it the auditor who is responsible for the ICS? Who is basically responsible for the ICS? Is it the management or the auditor? What did you say? Who's, before we talk about auditor's procedures with regard to the ICS. Who is basically responsible for the internal control systems? Who is responsible for the internal control system? Who is basically responsible for the internal control system? It is the management. Are we together? So what is the auditor's responsibility? We did talk about the management is to ensure that they implement They design and basically implement, making sure that the internal control systems are effective. They can basically detect and prevent errors. So what is basically the auditor? We did also touch on it. Auditors' procedures with regard. Auditors' procedures, auditors, auditors' procedures, procedures in regards to what it called to the ICS. Auditors' procedures with regard to the ICS. We can have a bit of a story in this. Are we together? So at the back of our mind, we are for sure that the person responsible for the internal control system is the management. So therefore, what is the auditor's role before we talk about what is the auditor's role in relation to the ICS? Make recommendation, ascertain whether the controls are good or not very good. Ascertain whether those controls are very good or not very good. So before ascertaining, an auditor basically has to understand, to evaluate before doing anything identifying whether the controls are stronger or weak. The number one, the first thing is having what you call an understanding of what you call the control system together. As an auditor, before you identify that the controls or the systems in these organizations are weak, one of the things that you must understand, must have what you call understanding of the systems together. Zipporah, you must have what you call the understanding of the system. So that is what you call ascertaining of the system. So one of the procedures is what you call ascertaining what you call the systems, ascertaining what you call the system. The second is basically to do what? The second, we basically say after ascertaining, we say recording. After ascertaining, you basically do what you call recording. We call it recording what you call the systems. Basically, you do what you call the recording of the system. And lastly, number three, we have what you call evaluating the systems. Evaluating what you call the systems. So when you ask what is the audit procedures with regard, auditors procedures with regard to the ICS, they're basically three: ascertaining the system, this is understanding the system, recording the systems, and basically evaluating the system. In simple words, what is ascertaining? This is understanding, what we call understanding. We call it understanding of what we call of the client. We call it understanding of the client's ICS. Together, team. Understanding of the client's ICS. We are together. So how does an auditor get to understand what we call the client system and how it operates? As an audit, how it operates. How would you have an understanding of the client system and how it operates? How would you get that information? We just need 4, and the rest you can. Techniques that you basically can use to ascertain of the client system and how it basically operates. How would you know it? As an auditor, how would you have that information? Discussion with management, yes. One would be discussion. We call it discussion with what you call with the management. I have not muted some people. Sorry, I can. Yes, reading those manuals. Let me mute. You didn't tell me I'd not mute everybody.
Design.
That's okay. You know, manual, so it's gonna manual, reading of this manual, of what it called of the manual. We just discussed about 4. Reading of the manual. I have a good team here. How would you ascertain the system? Observation of their procedures. You can just observe how observation, what they call observation of what they call of their procedures, procedures. You basically observe their procedures. And lastly, one of the observation of the procedures, questionnaires. Are we together? You can have what we call questionnaires. What they call the questionnaire, we have it as questionnaires. questionnaires altogether. We can also walk through test, what we call the walkthrough, performing walkthrough test. What we call a walkthrough test. Walkthrough test. Performing what we call a walkthrough test. Then we proceed to the next, what you say recording of the system. Recording what we call the system. So this is quite easy. When you say recording, what do you basically mean? Now, based on your evaluation, when you say recording of the system, so the auditor basically is recording now understanding of the system altogether. The auditor is basically doing what? Recording. After getting his understanding, he basically puts it to paper. So that is basically recording, putting down, we call it putting down, what we call understanding. Understanding, putting down what we call understanding of what we call of the system. Putting down basically is understanding of the system together. Yes, putting down is understanding of the system. Are we together? How you basically see the system. Let's say, for example, Zipporah. I go to an organization and I notice something. Let's say, for example, I was walking through that organization. I'm just seeing how something is happening. I'm finding somebody. Is in payroll, is the one paying people. I'm finding this person signing checks. I'm finding this person talking to the bank. What does it raise as an auditor? You go through, you're observing. This one person is the one paying people, is the one approving, is the one also ensuring that the money goes to these people. What alarm does it raise? What alarm does it raise? When you observe such a scenario, what does it raise? Zipporah. No segregation of duty. And if segregation of duty is not there, the risk level basically becomes very high. Or for example, you find, for example, people are being given cash and there's no even record. Somebody comes, give me 2,000. He goes to a cashier, give me 2,000. There's no systems in place. Somebody's being given 2,000. Another person comes, give me 1,000, and 1,000 is given. There's no signing. There's no record. What does it raise about that system? What does it raise about the system? Weak ICS, perfect. That is a weak controls, internal control system. Basically weak. Are we together? And those who are there should be taking advantage of that cashier. People will be so happy. Yes, no proper authorization. People will be so happy. Do you know people love where there's no control? Especially those who intend to be very rich very fast. They love areas where there's not enough control. Yes, they love. I've talked to this person. Give me, he knows me, no. We said in the last class that one of the worst things to do is to build business on friendship. Controls and friendships are two different things. Is that true? Lilian B, Zipporah. Control and friendship, those are two different things. Yes. Who are the first people to breach controls? They will be your friend. One of the areas that are risky are which get out. And I was saying it that it is not wise to employ even your brother. Is it wise to employ your brother? Virginia. Is it wise to employ your brother? It is not wise to employ your brother. Yes, because you'll not have control. One of the things is what we call emotional attachment. So it's not very wise to employ your brother. It's not very wise to employ your friends. Are we together? It is not very wise to employ your friends because they're likely, those are areas of alarm that are likely to violate control. Yes, business and pleasure, those aside, you cannot do any business with that. So those definitely affect what we call business altogether. But how do we, techniques that basically initiates what we call recording? techniques that we basically use to do the recording. What are basically these techniques that we basically use to do recording? How do we basically initiate recording? What are these techniques? What are these techniques that we basically use? So we have what we call narrative notes. Narrative notes. We have what we call the narrative notes. Narrative notes. We have questionnaires, descriptive questionnaires, descriptive questionnaires, descriptive questionnaires, what we call the flowcharts altogether, flowcharts, and what we call organizations chart, flowcharts, and what we call the organizations chart altogether, flowcharts and the organization chart. I want us just to go through this very fast. The number of things that we need today, we have to get to errors and fact. So when you talk about what we call narrative notes, what are narrative notes when you say narrative notes? So what are narrative notes? When you say narrative notes? So these are basically short notes that describe what's called the ICS and the accounting systems. Are we together? Short notes that basically describes what we call the internal control systems and the ICS, while making what's called comments and criticism. Are we together? While describing ICS, you're making comments and criticism altogether. Describing, making comments, and criticism altogether. So then we go to what we call descriptive questionnaires. What are descriptive questionnaires? So these are basically questions that are being asked by auditor to be answered by who? By the client. Are we together? To be answered by the client. These are basically questions that are being asked by auditor, basically to be answered by the client. But also on this descriptive, they require very short answers altogether to basically describe what you call control. And you remember on this descriptive, the essence of asking these short answers is to basically understand how the ICS is, the internal control system is basically altogether. So then we proceed now to the flow charts. What is a flow chart? When you say flow chart, flow chart. What is a flow chart? When you say a flow chart, what is a flow chart? A flow chart. So when you say a flow chart, what is a flow chart? When you say flow chart, diagrammatic representation of companies proceed. Simple, brief, and to the point together. Diagrammatic representation of companies' procedures, so showing what we call flow of accounting and document. Flow of accounting and documents. So diagrammatic representation of companies' procedures, so showing flow of accountings and show records together. Showing what we call flow of accounting, functions, and documents. So what is the importance of this flowchart? Very key importance. We just discussed importance of what we call a flow chart. Importance of what we call a flow chart. What is the importance of what we call a flow chart? What is the value of a flow chart? Importance of a flow chart. So if you're to go through this, it simplifies what we call the recording of ICS. Are we together? The whole picture. It simplifies the whole picture. It basically simplifies the whole pictures altogether. Again, it involves, if you have this will basically involves very little expenditure. This would definitely involve what we call very little. We say that simplifying. One of it is basically simplifying. Call it simplifying. What we call the recording of ICS. Then little expenditure, you spend less altogether. It involves little expenditure. Basically involves, we understand that involves what we call little expenditure. This basically would involve what we call little expenditure. This would definitely involve what we call little expenditure. Auditor will get the whole picture of organization, all picture. It gives you a whole picture, what we call all picture, all pic of what we call of an organization. It gives you the whole picture of an organization. It definitely gives you what we call the whole picture of the organization. It definitely gives you what's called the whole picture of the organizations altogether. Ensure system, it ensures that system is fully recorded. If you have this summary, what is the limitations of now the flowchart? Because this is a summary. What are the limitations of this? We can discuss without writing. Limitations. All of us, do we have the notes? All of us, do we have the notes? Are we together? All of us, do we have the notes? Do you have the notes? All of us. Perfect. So if you have a flowchart is now a simplification of this procedure. So you can just have a faster understanding of the ICS. What are the limitations of now a flowchart? What would be the limitations of the flowchart? What would be the limitations of the flowchart? You see, diagram may not be self-explanatory. Perfect. The diagrams may not be self-explanatory. But also, when it comes to amending them, you cannot amend them without drawing. When you're carrying out an amendment, you have to draw those diagram. Together, Joy Wanga, Aida, Edith, Lillian B, and Awiko Dangote. No descriptive, yes, no descriptive altogether. No descriptive altogether. No descriptive. We can say the flowchart may contain what we call symbol. You can have symbols that people do not understand. You can contain simple symbols, or signs that people do not understand. Stand altogether. It shows the flow of document. They show the flow of documents, but they don't show what happens after the flow. Are we together? So that basically implies that information is not very complete. You don't understand. You may not have complete information when it comes to what we call a flowchart altogether. So features of a good flowchart. Features of what we call a good flowchart. What do you have as features of what we call of a good flowchart? So what should a good flowchart basically contain as a feature? What should a good flowchart, diagrammatical representation of organization processes? What should be a good feature of a good flowchart? Properly headed, proper header, should have a proper header. A good flowchart should do what? One is a proper header. Are we together? Proper header. Again, you should not have congestion altogether. Should have keys for symbol altogether. Should have keys for symbol. Keys for symbol. Just showing us what the symbol key for symbol. What does this symbol basically for symbols? What do they show altogether? What does those symbols basically show? We also have things to do with should not be congested with lines altogether. So that somebody should be able to see. Should not, we say, be congested. So this is for clarity, congested with line, so that you have clarity. When you look at it, it's not you're able to see how the flow is altogether. Then say that there should be separate flow chart for each area. Separate flow chart. Separate. We call it flow chart. We say for each area. There should definitely flow chart for each area. Separate flow charts basically for each area. What we call the separate, just a minute, separate flow chart for each area. There should be what we call separate flow chart for each area. Are we together? Separate chart. Are we together for each area? Together, those are some of the features of a good flow chart. Together, we respond with a yes. Are we together? If we are together, we respond. If we are together, we respond with yes. Then we'll talk about lastly, organization chart. Organization chart. When you are employed, were you shown the organization chart? Wherever you are, do you understand the organization chart? Organization chart. Do you understand organization chart? What we call the organization chart. Organization, we call it chart. So what is an organization chart? When you say organization chart, when you basically say organization chart, do you understand it? Yeah, very important altogether. Some people can go into to an organization and they think they'll just go and talk to the CEO. So very good organizations will give you the chart. Why do you think they give you the chart? Why do we explain for you the organization chart? Why do you think they will also show you when you're employed? When you're checking through, this is one of the things that you're being shown. Yes, reporting lines, to show the reporting lines. So that you don't just wake up. You don't just wake up altogether. And you leave your line manager, line of authority, and you go to the CEO. It's not possible. There's how channel flow. So basically, when you talk about organization chart, it basically shows what we call the chain of command or system of authority, showing duties and responsibility of each person altogether. So when you get to organization, you'll be given the chart. So the chart will simply tell you where you should be, where you should be. So the chart will simply tell you where you need to be and how authority flow and how it's being delegated altogether and how basically authority is being delegated altogether. Together, perfect. Together, we respond with a yes if we are together. Kama tuko pamoja, tubonyeze yes. Perfect. I want to proceed to what we call evaluating now the system. What we call evaluating. What we call evaluating what we call the systems. So to evaluating the system as the third procedure, we start with ascertaining the system as the first procedure. We went to recording of the system, and now lastly, what we call evaluating the system. So when you say evaluating, now you're assessing whether the system is effective. Are we together? Whether the system is effective. Are we together? Whether the system is effective or not, are we together? Depending on the effectiveness or how strong all the weakness is, it determines how much you can rely on the system or basically not rely on the system. And I think we did discuss it when you were talking about a number of things together, especially when you go to an organization and you find that the systems are stronger. What does it tell you about this as an auditor? If the systems are effective, meaning there's a strong ICS, what does it basically say about the organization, especially when the ICS is strong? What does it basically tell us about the system? That you can rely on that same system. You can place reliance on that system, especially when you have, when you notice that the system is efficient. As an auditor, you can basically place reliance on the system. That's why we say you may not carry extensive, but you can. If the systems, you see the procedures, authorization procedures are followed, definitely you can rely on that system. But in scenarios when you go to evaluate the system, and you find that the systems are very weak, what do you do? What does it tell you? What does it basically tell you? What does it basically tell you? As an auditor, it's not reliable. So as an auditor, what are you going to do? Increase the sample size altogether. If the sample size, you intended to take a smaller sample, now you're going to expand the sample size altogether. Again, also, it basically tells you that the audit procedures, you need to carry audits as early as possible. You need to conduct more tests, but again, the timing of the audit you'll not spend less time, but you'll spend much of the time into the same in the system together. So on evaluating the system, you are basically doing what? You are testing, or what you call assessing, assessing what you call the system to basically determine what you call their effectiveness, or otherwise to determine what you call the extent of reliance the auditor will basically place altogether. The extent that you basically place. And we've talked about in scenarios where we have strong system, we basically understand the auditor can rely on those systems. But in scenarios where there's a weak internal control system, as an auditor, you cannot rely. And that's why, as Kinedin says, you are now, if you decided that the sample size, you're going to take a smaller sample size, you're going to expand those samples altogether. You're going to conduct a detailed for substantive testing, or you're going to conduct more tests. But at the same time, you realize that you're going to take more time in terms of auditing. So techniques used in evaluating the systems. What are the techniques? We call it techniques used in what call in evaluating. We call it in evaluating what we call the systems. What are the techniques that basically are used to evaluate what we call the systems? Techniques that basically are being used to evaluate the systems. What are the techniques that basically are used? What are techniques that you can use to evaluate how strong or weak the system is? Third party, yes. Third party confirmation. Third party, we call it confirmation. Third party confirmation. We have what's called third party confirmation. Yes, internal control questionnaires, internal ICQs. Another one. Another one. Substantive testing, perfect. Testing, substantive testing, observation, and five will be enough. Compliance testing, using what you call the compliance, call it a compliance testing. Compliance testing, perfect. Compliance testing, perfect. I want us to talk about the ISO Qs. Are we together? Again, also we have the ARPs, sorry. ARPs ni nini? Are we together? ARPs tunamaanisha nini? ARPs, also very good one. ARPs ni nini? Analytical review procedures. This is now competition. You basically carry out those computation. Are we to get the ratios to compare and analyze altogether? So we start with, we can pick on ISO Qs. We can pick maybe on two. Internal control questionnaires. So internal control questionnaires. Internal control questionnaires. What are these? What are these when you talk about internal control questionnaires? And what is their purpose? Internal control questionnaire. What are these? What are ISO Qs? What are ISO queues? So when you say ISO queues, internal control questionnaires, what are these? Question asked by the client staff. They're basically short altogether. They're basically short and they require short answers. They basically require short answers. When you talk about short answers, yes and no. Yes and no, those are very short answers altogether. But you basically understand that ISO queues are classified into two. They're basically classified into two. You understand classified? We say into two. We have ICQ, we have ICEQ. So what is this? This we talked about. ICEQ. What is that? ICEQ. What is that? ICEQ. So this is internal control, evaluating questionnaires altogether. Evaluating questionnaires together. Evaluating questionnaires. Internal control, evaluating questionnaire, evaluation questionnaires. So we start with this first one. And then we talk about ICEQ. So say this is internal control evaluation questionnaire. This is internal control questionnaires. This is internal control evaluation questionnaires. So internal control questionnaires focus on determining. This one basically focus on determining. This one basically focus on what's called on determining. We call it focus on determining. This one basically focus on determining whether there are controls, whether there are what call controls, whether there are controls, focus on whether there are control that meet control objective, that meets what call that meet what we call control or control objectives. So are there controls that basically meet control objectives? Then when you say internal control evaluation criteria, so now when you add the word evaluation, what does it ISO QE? What does it now basically does? Evaluation criteria. So number one, do we have controls that meets the objective? But now on the ICEQ, internal control evaluation criteria. So we're basically focusing depending on determining whether they control, prevent, and detect error. Yes, control, detect, and say prevent what we call error. Whether does the control basically control and does this control basically detect and we say prevent error together. So you can be told importance of what we call ICQ. Importance, what we call the importance of what we call ICQ, internal control questionnaires. What is the value of this internal control questionnaire? One, we say determining whether there's control and whether they meet the objective. ICEQ, control, detect, and prevent errors. So what is the importance? So number one, enables the auditor to sustain. Enables the auditor to ascertain. We call it to ascertain what I call the system. To have an understanding of the system, enables to clarify assets of weakness, identify assets of weakness, identify what we call assets of what we call of weakness, identify what we call areas of weakness, identify areas of weakness, identify areas of weakness, we can say easy to use and control, easy to use and what to call control. They're definitely easier to use and control. control, easier to use and say and control, easier to use and control. Ensure controls are considered. All controls ensures that all controls ensure that basically all controls are considered. So that's okay. So these are some of the purpose of internal control questionnaires. Those are the purpose of control questionnaires. For these ones, I just want us to cover very fast before we take our break, internal control questionnaires. So then we move to use of third-party confirmation. Who are the third party? When you talk about third-party confirmation, who are basically third party? Who are the third party? We have the creditors. We have the creditors of third party. Apart from creditors, who are the third parties? Third parties confirmation. Apart from creditors, who are third parties? Banks, customers, those are third parties. So you can get confirmation from the customers, bank, and the creditors. Those are third party. Then when you talk about compliance testing, what is the compliance testing? As the next, we have compliance testing. What is compliance testing? What do we call compliance testing? When you say compliance testing, what is compliance as we discussed that? What is compliance testing? What is this that we call the compliance? We call it the compliance testing. Testing as a method of evaluating compliance testing. You basically test control to basically determine the extent to which you can rely on them. Are we together? Test controls that are in place to determine what we call the extent at which you can basically place reliance on them. Are we together? You test what we call control to determine what we call the extent in which you can basically place reliance on them. Together, team. Testing what we call test of control, test control. These are test control to determine what we call the extent to which we say you can place what we call reliance, we say on them, the extent in which you can basically place what we call reliance on them. Then we have what we call substantive testing. So when you talk about substantive testing as a way, substantive, we call it detailed testing. So substantive testing is now what we call the detailed testing altogether. So that is, say, test of transaction. It's what we call detailed testing, where we say details of transaction, test details of transaction, and accounts balance. You basically test details of transaction and accounts balance to provide what? To prove if they're valid, if they're accurate, and if they're complete. Are we together? Completeness of those information in the client's recording. So substantive testing, which is the detailed testing, basically somebody asked, can you say compliance testing is determining the level of yes, implementation? Yes, that should be perfect. The level of what we call implementation. Are we together? So if the implementation is full, if the implementation is 100%, then you can place reliance on them. If the implementation is partial, then definitely you cannot place reliance on them. Are we together? Because that touches how you implement ICS. So components of ICS, are we together? That is not bad. That should be okay. So as always, that's the part together, perfect. So then when you talk about substantive testing, we say is the detailed testing. And basically implying that you're testing transactions and accounts balance. Are we together? And accounts balance, definitely call it detailed testing. So you're basically testing what we call the accounts balance to establish what we call validity, accuracy, and what we call completeness, accuracy and completeness, accuracy and completeness of the information in the client records, accuracy, completeness, and validity of information in the client's record. That is what we call substantive testing together. Substantive testing, we respond with a yes. Observation. What is now, how do you carry out an observation? Observation. How would you carry out an observation as a method of evaluating? How would you carry observation? Observation, you can see policy. You're supposed to do this. Is it being done? You know, budget. So what are divisions in the budget? That is basically you observe to detect altogether. So you can observe, are we together? Any divisions, are we together? Watching tasks that are being done, are we together? In terms of policies that are in place, are they moving away from the policies? Are deviation from the policies? When you look at the budget, there are deviations on the budgets that were basically initiated. Then we have the ARPs. ARPs now, these are computing. What are you computing? Computation on what? What are you basically computing? ARP. Ratios, you can computation of what we call ratios. We have the ratios. We have the trend analysis, and say comparing financial and the non-financial information. We say comparison of financial and non-financial information. So that is basically on the ARPs together, ARPs. Then the last part, because I want to come back and discuss something very important, what we call the management letter. So action taken when the auditor established that the systems are weak. Actions taken when the auditor establish that the ICS is weak. Some of us will touch on this. Davis talked about one of it. What will happen when you establish that the ICS, we had talked about it a bit of it, we say that you are going to increase the sampling. If you decided to, basically to do what? To sample a few things together, then you definitely will increase the sampling size together. What did you do apart from the sampling? This one we touched on, when you identify that the controls are weaker. So again, you bring the weakness to the attention of what you call of the management. Bring the weakness, bring what you call the weakness to what you call the management. Bring the weakness to the management attention. Are we together? Bring the weakness to the management attention. Begin audit early. Perfect. You begin it early. Begin it early. What do you do again? Begin it early. Increase sample size. Increase what's called the sample size. You increase the sample size and say, document the weakness in the management letter. Document the weakness in what's called in the management letter. Superstar. Document the weakness in the management letter. Change the audit. Yes, you change the approach. If you are having a weak approach, change the approach. Change what's called the audit. The audit approach. You carry out what you call an extensive substantive testing. Vouching, you can go for the vouching system. You can basically go for the vouching. Yes, you go for the vouching system. Yes. Yes, if it's extremely weak altogether, you will definitely qualify the report. So what is a qualified report, Lillian B? What is a qualified report? What is a qualified report? When you say qualified report, what do you basically mean? If it's extremely weak, we say you qualify the report. Expectation gap. What did you say about the expectation gap between public and the auditor? The public believes that a good report, the public basically believes that a good report, a qualified report, is a good report. Yes, a negative one. So you remember that under what you call expectation gap. Do you remember that when you taught that on the expectation gap? I hope you remember. Yes. So that is so if it's extremely weak, you qualify. That's a negative report. Then the management letter. I just talk briefly, then I give a brief. The management, call it the management letter. What is the difference between an engagement letter and management letter? What is the difference between engagement letter and the management letter? What are the difference between those two things? Engagement letter and the management letter. What is the difference between engagement and management letter? As we take a break, I come back and you let me know so we can have our break. Can we resume? If we can, then we respond with this. I want us to finish this. If we can, then we resume. I want us to finish what you have. Then we can basically start on errors and fraud, knowing that whatever is now ahead of us is manageable. Whatever is ahead of us will not be much. So what is a management letter? First of all, ask what is an engagement letter? We did engagement letter. What is an engagement letter? We did we discuss engagement letter? Acknowledges acceptance of appointment. Perfect. But on the engagement letter, it happens before you initiate an audit work together. A lot of times people confuse engagement letter with the management letter. Where does both of them come from? So engagement letter acknowledges acceptance of appointment. On that, you're going to clarify, issues that you need before an audit is come. So the engagement letter is basically drafted by an auditor and signed by both auditor and the client. Signed by both auditor and the client together. So it happens before an audit. On the engagement letter, we basically say that for an engagement letter, it basically emanates from an auditor. Engagement letter, we say, basically emanates from an auditor. It writes to what they call management together. Concerning what? Weaknesses that the auditor basically has identified from the ICS. So it's a letter from the auditor to the management, clearly expressing the weaknesses that has basically emanated from ICS. After I explain those weaknesses, the auditor also basically provides what's called recommendation. How do we sort issues that pertains to the weaknesses of the system? It provides what's called recommendation as per regard to the weaknesses. But again, on the management letter, an auditor can also raise issues of importance to the management together. Issues of importance that it wishes to raise to the management. That is what's called an engagement letter. So management letter. So management letter is basically a letter that basically comes from an auditor to the management, expressing what we call the weaknesses that the auditor has basically identified in the internal control system. The auditor basically provides what we call recommendation. How do we sort issues pertaining to the weakness? But at the same time, on the management letter, the auditor can also raise issues that are of importance to the management. is that explanation at home? Dennis, is that explanation at home? Lillian B, is that explanation at home? We respond with a yes. So what is the purpose of what we call management letter? Purpose, what we call the purpose of what we call of the management letter. What is the purpose of what we call the management letter? From the definition, we can weakness, report to the management, deficiency, report to what it calls the management, what we call the deficiency, what it called the deficiencies in what we call in the ICF. So definitely report to the management, deficiency, shortcomings in the internal control. Are we together? So advice, provide advice to the management, provide what we call, provide advice to what we call to the management on how to improve, on basically how to improve what we call the systems. So it basically provides advice to the management, basically on how to improve the system. We can write about 5. What can it report? Enable the management to put matters right that would otherwise lead to audit. Enables the management matters right that would otherwise qualify, put matters right that would otherwise, we say qualify, that would otherwise basically qualify, we say qualify audit, otherwise qualify the audit. Maybe 2 from the students, 2. So these 2 basically we've gotten from the definition, 2 more, then we close it that. 2 more, management letter. Other matters, communicate to the management, auditor to communicate, we say to the management on matters, auditor to communicate to the management on matters that have impact on the future, that have what you call impact on what you call on the future. Matters that basically have impact on the future. One more, last one from the learners. So it was not only sharing of the weakness, recommendation, and again also shares of issues that are very important to the management. The last one. So if it's weakness, again, that should point on areas that management should focus on. Areas where the management lay what they call emphasis on. Emphasis on. Areas that the management basically needs to lay emphasis on. Because basically you're talking about weakness. These areas that the management basically needs to lay emphasis on. Emphasis on. Areas that the management could lay emphasis on or become more effective. Areas that they need to become basically more effective on the management letter. We respond with a yes if we're together. Are we together? Are we together? If you're together, we respond with a yes. So you can be asked component, like we did discuss component of engagement letter. You can also be asked component of management letter, component of what they call the management letter. You can be asked what are the components of the management letter. So what are the components of the management letter? Again, because it's talking about weakness, we'll describe IC, description of what they call of the ICS, description of the ICS, because we're talking about weakness of the ICS, a list of description of weakness identified, a list of what they call of description of what they call of the weaknesses, what they call weaknesses identified. A list of description of what they call of the weaknesses identified, a list of what we call description, risk arising from each weakness. What is the impact? Risk arising, we call it from each weaknesses. Risk that basically arises from each weaknesses, risk that arise from weaknesses. Then we can also talk about non-compliance with accounting standards and legislation. Non-compliance with what we call with accounting standards and regulations. So these are some of the components altogether. So when you ask what are the components of management letter, like you can be asked components of engagement letter. So management letter basically talks about weaknesses. So list or a description. Before you talk about description of ICS, then you list the descriptions of weaknesses, risk arising from each weakness, what to do, what is done. Then you can also talk about non-compliance, because non-compliance with accounting standards and regulation, because these are areas of also not together. So it can also address what we call unsuitable accounting policies and principles altogether. So these are some of the components of what we call the management letter. Is that well understood? Components of the management letter. Is the management letter understood? And purpose of the management letter and components of the management letter. Is it well understood? Is it well understood? Is it well understood? Perfect. So there's something that I want to give you as an assignment for you to controls. This is your assignment. I'll get a question that I'll give you. Internal control in computerized environment. Internal, I'm setting a number of questions. Internal control in what you call in computerized. Make sure you read it computerized systems. Internal control in computerized system. Are you promising, as I give you questions on this area, you read that internal controls on the computerized system, the part? Are you going to read that so that as I give a question, you will be able to tackle that? So that is not much. We are done with that. On the ICS, this will be the last part. Internal controls in what they call computerized system. Dennis, I want you people to look at that. When you check the notes, it's not something long. I'll wait together. I want you to look at that for me. Dennis, on the ICS, we will finalize with that together. Perfect. So I want us to just introduce errors. Now, whatever we have, we can summarize. This is where I want us to get. Whatever is pending, we can easily sort. So when I get on Thursday, we should be able to finish errors and fraud and go to forensic. The others should be much easier and faster. We should move very much easier and faster. So errors, we just introduce errors, what we call ISA 240, that is errors, fraud, and other irregularity. Errors, fraud, and what we call and other irregularities. So we just define it. What is error? What is fraud? So we can define these two things, what is error and what is fraud. We define that, then we just leave you. What is error? Do you have the notes on this? Do you have the notes on this? Errors, fraud, and irregularities. Do you have the notes on that? You give me a yes, kama tuko nayo. Awiko. Jaffa, Jaffa, do you have the notes? I'm providing this. I'm providing that. We don't have much. With now, these ones, they should flow very fast. These ones, we should flow very fast. Joy puts it very right. Error is what you call intentional, unintentional. When you say error is basically an intent, Jaffa, we are providing that unintentional, stroke innocent misstatement. What about fraud? So error is what we call innocent. We call it innocent. Innocent, stroke what we call unintentional misstatement. Error is unintentional, innocent, stroke unintentional misstatement. Yes, fraud is definitely a deliberate act. So fraud is what we call deliberate act. So this is basically deliberate. Deliberate, call it a deliberate act. For example, people colluding, individuals collusion, basically to deceive. Individuals basically colluding to deceive. Then lastly, what is irregularity? Irregularities. What are irregularities? So activities that are contrary to the policies of the company. When you ask what is irregularity, deliberate acts like collusion, people collude to defraud, altogether. Collusion, that was on fraud, but irregularity is basically what we call activities or events. Activities, we call it activities, or what we call events that are contrary, we call it contrary to the company's policy, that are contrary to the company's policy. Do you understand these three things? Error is innocent, stroke unintentional. Fraud is what's called a deliberate act. Irregularity are activities or events that are contrary to the company's policy. Do we understand those three things? Do we understand those three things? Perfect, if we understand those three things. That is on errors, fraud, and irregularities. So we pick it from there. I should be able to finish this and start on forensic. That is on Thursday. Can we step in much earlier on Thursday? We start at 5:45. Can I start the class at 5:45 on Thursday? Can I start this at 5:45? Kindly 5:45 on Thursday, on Thursday, 5:45. 15 minutes before 6. Perfect, if I can. So yes, I'm sharing, Joy. Engagement letter is already there. I will show you. Engagement letter is there. So with this, I'm not afraid we are okay. Now, whatever was meant, this is okay. Engagement letter, I'm showing you. Joy, I should be able to show you where it is. Is that okay? Yes, I'm showing you where it is, Joy. So thank you so much for attending class. And thank you for your consistency. I just want us to revise extensively. Yes. So I should be able to finish error, fraud, and other irregularities and move to forensic audit. The others, we can work on them as we revise and we close it. But I want a one-term class. We should pass on a one-term. All of us, we should make it one-term. So God bless you. The people that I'm supposed to meet tomorrow in the morning, is it true? We are meeting tomorrow in the morning. The people we are meeting tomorrow in the morning. I think this class, most of you are in this class. Are we meeting tomorrow in the morning? Awiko, can you, Jaffa? Yes, yes, in the morning. Yes, perfect. So I hope you know to keep time. 5 exactly, keep time. Yes, God bless you and God bless our class. And again, we have our blogs on 21st. Kindly, you can talk to your friends, tell them we have a blog. For those who want blogs for other subjects, you can also join us. Are we together? Kindly, you pass that message to others about our blogs, those who intend to come for revision. So God bless you. We close it, we wrap it. Unless somebody has something that is burning that cannot be postponed. But I beg to close it there.